All right, let's do this. Good morning, everybody. This is the morning show here on Stock Market TV. You know the drill by now. Spencer, Steve, JC, Rick, one on the charts this week, doing a great job. Full crew today. Let's get this show on the road. Kenny Glick will be here. Todd Sohn will be here. Phil Perlman will be here. That's what we got. We got a lot to get to, so let's just start the show. Just no more long intros. Let's just get to the program. Okay, cool.
All right, ladies and gentlemen, we are back.
Hello.
How are you guys? Did you miss me?
We did.
What's up, dude?
I love that you didn't get us canceled.
To my knowledge, no.
To our knowledge. All right. So new all-time highs. Big day yesterday, I heard. Bitcoin all-time highs, S&P 500 all-time highs, NASDAQ all-time highs, Russell 2000 all-time highs.
Yeah, Intercontinental Exchange is taking a stake in Polymarket. Small.
Apparently so.
Shout out Robinhood.
Why?
They got their own.
They got their own betting markets?
Yeah.
Oh, I didn't realize that. I thought that through Robinhood you could bet on the other ones. You're saying they have their own?
I think so. Chat, let me know. I don't go on that platform. But I'm pretty sure they have their
I
own.
use Robinhood all the time and you don't.
Yeah, I mean, you really shouldn't say that out loud.
I don't understand what's wrong with Robinhood. I'm not ashamed. I'm not ashamed about Robinhood. You've used Robinhood data in the past, so don't act like
I would never put my
you're
trades
too cool
through and give Citadel like 3% on a spread when I can put that trade on through a
I'm
professional
not
broker.
trading on Robinhood. I'm using the
but
data.
You make it sound like you are.
Okay. Sorry. I'm not trading on Robinhood. I think I got $1,000 or $2,000 in an account.
And I'm serious.
It just sits there. I don't even know. It might even be in something. I don't even know if it's in cash. Or I
He
don't
doesn't even know.
Well, listen,
I could check. I could tell you right now if you want.
I'm serious about this. If you're trading some of these like thin options, you're gonna get screwed on Robinhood. And if you're trading them in size, it's material. So
Casey Trade is the best for options.
Maybe.
Strazza doesn't agree.
I don't know. I don't know anything about. Look, I'm good. I'm happy with what I've been using the same thing for 15 years now. So like I'm good. I don't really know what else is out.
What do you guys think I own?
I'll bet
my God, you're gonna crack up when you find out what I own in my Robinhood account.
They gave you shares of Chesapeake Energy or like eToro.
100% of my portfolio is in one thing. Guess what I own? You're gonna crack up.
Wait. It's gonna be a $4 stock or a $5 stock.
Yeah.
Because didn't they used to give?
Come on, tell me that's not funny. That's pretty funny. Come on.
I got to mine because I'm sure I got
my fault. Get out of here. Get out of here. Sorry, my bad.
It's so good. That just made my day to find out. I didn't know what was in my Robinhood account. I look and it's actually $1,000 worth of Doge. That is so good.
Hey, speaking of Citadel, taking your good fills on Robinhood, they're up 5% this year.
What?
Yeah. I got some things to talk about here. I just want to give some perspective on the new highs we're seeing. I think we got things to talk about. What do you say we do a little quick state of the markets and dive right in?
Yeah.
All right, Dow Jones Industrial Average doing nothing this morning, up 32 handles, pushing 47,000, Spencer Israel, 47,000 for the Dow Jones Industrial Average. Feels like just yesterday we were at 25,000, quickly approaching double that at 50,000. Wow, time flies in bull markets. You got the S&P 500 flat, also doing nothing, just under 6,800. About that. NASDAQ, think about that, 6,800, Spencer. The bottom of the S&P 500 after the great financial crisis was 666.
That's right.
Out of zero. All right? Out of zero. NASDAQ 100, new all-time highs yesterday, up another 3,500 points. 25,220 for the NASDAQ 100 futures. 30-year bond futures literally 0.00 unchanged today, 116.5. You got crude oil flat, 61.5. Copper continues to impress, 510 for copper, up another percent today. Gold pushing 4,000 for gold. Wow, gold 4,000, up about a third of a percent. Silver down a third of a percent, 48.25 with the VIX flat, still above 16 for the VIX. Wow. We got Bitcoin, 124,500, new all-time highs for Bitcoin yesterday. Ethereum, 4,700, flat today as well. Not much going on. Solana down 1%, 230 for Solana. That brings the total crypto market cap, Mr. Spencer Israel, highest daily close ever, highest monthly close, highest quarterly close. Total crypto market cap, 4.22 trillion, most ever.
It feels like we were stuck in that like high 3 range for quite a while. It's nice to see us break through.
4.2 trillion. Man, oh man, oh man. Almost as big as Nvidia. Almost.
It's true.
Almost, maybe a little more. It could be the size of one stock. That's how big crypto is. It's not even big, you got a single stock bigger than the whole damn market. I don't say that as a bearish thing. I say that as to, like, how much smaller could crypto get? Right?
A lot smaller, actually.
I don't think so. I think it could go to 10. Right now, 4.2 trillion.
It could also go to like 2, right?
All right. So new all-time highs, right? So bring up slide 3. This is a great one. This one coming from our friends over at JP Morgan Asset Management. We like those guys, Spencer.
They are good.
We like those guys. We are friends with them. They are friends with us. We like those guys. Can we get a little zoom in? Can we get a little zoom in action? So we got a green bar and a gray bar, right? And the returns 3 months out, 6 months out, 1 year, 2 year, 3 year, 5 years out, depending on whether you're buying a stock on a random day or whether you're buying, the S&P 500 more specifically, whether you're buying the S&P 500 on a random day or whether you're buying it at an all-time high. So you're buying at new highs or you're buying on random days. And as it turns out, the returns when you buy it at new highs are actually better than when you buy on any other day. So people out there get scared at new highs. They're very scared. They're very afraid of new highs. Big boogeyman. And historically, that's actually a great time to be buying stocks.
I think it'd be a fun exercise to like come up with like a 10 commandments of this show. And this concept that all-time highs are bullish would be on that 10 commandments for sure. This is one of the core concepts that I have learned from you guys. And I hope everyone else watching has learned as well. All-time highs, not scary. All-time highs, good thing.
Yes.
Right.
My blog post today, what was the name? My headline of my blog post today was "New highs are good."
Yeah. Nice.
Oh.
What happened to JC?
I don't know. So apparently, just to follow up on the earlier conversation, Robinhood does the betting market stuff through a partnership with Kalshi.
I think I probably knew that. Can you check your mic? You got like a weird echo going on.
I just reset, so
that's probably why. So you may have to do the echo cancellation thing. JC said he'll have to hop for like 5 seconds because he's in his backyard. So maybe that's what that was. But he'll be back shortly.
Is my noise better now?
Oh, whoa, Darth Vader, hello.
Hello.
No, seriously, it was worse.
Yeah. Check 1, 2.
No,
it's not bad.
No.
I don't know what I'm doing.
JC, are they digging a hole in your backyard? What's going on there?
They are. They're digging holes in the backyard, putting in a pool. I got the Bitcoin miner to heat the pool. So now I just need a pool so that my Bitcoin miner can heat something.
Yeah, that makes sense.
What do you think about that? Does that sound logic?
That's better, Steve. Thank you.
Okay.
Okay, so Strazza, why do you think grown adults are so bad at math? and they get scared at new highs?
Market internals have never been so good. Is that the math you're talking about?
I wouldn't say they've never been so good.
This cycle. This cycle. This cycle. Yeah.
Eh.
Just look at the indicators. Like most of them are high readings for the cycle.
Well, the percentage of stocks on the New York Stock Exchange above their 200-day moving average peaked almost a month ago.
Right.
Just saying. That's
okay.
not necessarily mean that the stock market needs to go down, but to answer your question as to whether this is the best internals have looked, I'd argue.
Look at the shorter term ones.
Shorter term ones, the percentage of stocks on the New York Stock Exchange above their 50-day, that peaked in July.
Right.
So we are now in October. That peaked 3 months ago, and we're still hovering down near lows. So, you can look at it one of two ways. Particularly the percentage of stocks above their 50-day is that deterioration we've seen for 3 months. Is it? Or is there upside?
But you're looking at the S&P 500 indicators, to be clear, not the NYSE common stock only ones.
Again, New York Stock Exchange.
NYSE common stock only?
Yes.
Yeah. Breath hasn't been this good the whole cycle. We could see it.
I'm telling you, the percentage of stocks above their 50-day on the New York Stock Exchange peaked 3 months ago.
Yeah.
And the percentage of stocks above their 200-day peaked a month ago. Just saying.
More things are working better at this moment, right now, than at any point during the cycle.
It certainly feels that way, doesn't it? It certainly feels that way. I mean, for me, more things are working. My nuclears are working. The biotechs are working. Semiconductors are working. Like, there are things we got that are working.
And a lot of the speculative shit is working. Hot stocks are working all of a sudden. Like, everything's working out here.
Yeah.
Look, the indicators are great, but
line on the New York Stock Exchange made new highs on September the 11th.
JC, you know this about me. The indicators are great. I know them well. But I'm a look and feel guy.
You are.
You
always have been.
I'm a look and feel guy. I look around. I see AMD zooming 30% pre-market. They're buying the pot stocks last week. Everything
so
with
what
that
happened?
decent short interest.
Hold on. America's socialist now? Now we're just is it socialist or communist when they take over the companies? Is it capitalism when they're actually giving the companies money? How does that work?
Well, this isn't government stuff with the AMD OpenAI, thank God. This is just between those two businesses.
So what's the story? So this is not communism.
No, but they're doing deals with everybody out here. They're going to keep coming, right? And the stocks that are doing deals with the government, I mean, look at the follow through.
There's another one today. We have another one today.
It's not like a big spike and fade. Like, these things are spiking their initiation readings and then following through. Like, look at a chart of Intel or Pfizer now.
TMQ Trilogy Metals is today's winner. You have won the government sweepstakes.
How much are they up?
250.
250%?
Yes.
What's the ticker symbol on this thing?
TMQ.
TMQ.
I forget my alphabet, but Tango. Something.
This thing's up 250%. Wow. Trilogy Metals, TMQ.
Great name.
Wow, 250%. And so what happened? The government.
Yep, that's it. The government. That's why you got it right there. The government. That's it.
Wow. Strazza, I got to tell you, you and I, we've been talking about this, when they first did the MP materials, and we're like, hey, as investors, whether we like this or not, whether we think it's right or not, that's not our business as far as investing goes. The question was at the time, and still is, do you think there's going to be more of that, or you think that was it, right?
Yeah.
Strazza and I both agreed that there's probably going to be more, right? So what are the types of sectors and industry groups where that might happen so that we can not short those? Because imagine you're short this thing up 250% in your face, right? Yeah, that's no good. So again, I think the answer remains the same. Is there going to be more of this? Probably. Do we want to be shorting nuclear stocks knowing that we could wake up one morning and this thing's up a double in your face? Probably not. Probably want to continue to be long nuclear because they've been working, but knowing that we got an additional tailwind. Same thing with rare earth metals. Same thing with what other industry groups do we need to consider that as a risk of being short and a potential tailwind of being long?
I would say you could just nail it down to strategic resource businesses and fringe businesses. But I mean, they did the deal with Intel, so that kind of breaks that. I don't know. I think everything's fair game. Unfortunately, I don't like it, to be clear. It's my least favorite thing that the Trump administration has done, to be 100% clear about this. I hate this.
But again, it doesn't matter what you think. It doesn't matter whether you
I'm just
like it or
telling you.
not. The
can
question
have an
is,
opinion.
what's the trade and what's not the trade? I think not the trade. You don't short the things that have the possibility to rip in your face on a Trump rally, on a Trump boost or whatever, right?
Yeah, but it's trash to see Republicans act like such bad capitalists, in my opinion. That's a shame. Sorry.
Again, but that's not our place to judge. It's it's our job to make money from it. No?
I'm with you. Yeah,
I
fine.
got one. All right, slide 4. Throw this one up. All right, so everybody talking about melt up, final
it's coming.
stages
It's
of
here.
euphoria. My understanding is that on the cable networks, on the CNBC yesterday, they were talking about how this is like the euphoric final stage or whatever. Is my understanding. I was getting tweeted at, be like, JC, you got to hear these guys. I'm like, are you serious? So I just want to remind everybody.
Damn, they're saying that on CNBC? Shit.
Now, that's what, according to the Twitter, so it must be true. Must be true.
All right. All right.
So hold
I'll
on.
have to watch today.
So look at these magazine covers. You like these?
Look, I think
For the record,
JC.
I own both of these magazines.
Of course you do.
When do you think these were from?
When is the one from the left? Oh, you want me to guess?
Mm-hmm.
2017.
2017? No, bro.
Yeah.
All
Is
right.
that old?
Yeah.
What,
No,
06?
these are, I'll just tell you.
06? 07?
Okay, stop. You're embarrassing yourself.
I don't know. 80s?
The one on the left is from September of
97.
September of 98, and the one on the right is from October of 98.
Wow. Okay.
So the
I get it. They're
NASDAQ
both
didn't
.com.
peak for another 17 months after this.
Okay. So they're talking about the .com boom only. Okay. Fine. Hey, Jeff Bezos saying bubble as well. What a loser that guy is, though, huh?
Dude,
He
wasn't
doesn't know anything about the
PTJ
stock market.
on the basic cable yesterday? PTJ was out there scaring people, right?
Yeah, and Ken Griffith the day before. Yeah. Yeah.
Here's the thing about bull markets. I would encourage every single one of you, honestly, you have to go study every bull market over the last 100 years. And if you haven't, then you should leave this show right now and go do that instead. Because nothing that we're going to say here today is as important as what you'll learn in studying every bull market over the last 100 years. I promise you.
Yeah.
One thing that you're going to learn about these bull markets, and trust me, I have studied them obsessively. You're going to find throughout bull markets, all of them, by the way, you're going to find billionaires telling you about the crash in stocks that's coming at any moment. And the media will make sure that you know exactly which billionaire it is at the moment and will continue to update you when new billionaires are suggesting such things. That's not just this bull market. That is all the bull markets, right? So when you study all the bull markets in history, you want to just remember billionaires will come out saying scary things in all of them. These magazine covers are just a reminder that they'll tell you about a crash, they'll tell you about a bubble, and then the market continues because, as we know, the market can stay irrational longer than we can stay solvent. That's just what it is.
JC, I'll tell you something irrational, right? All these guys on TV, and I understand the chat. Paul Tudor Jones, just excellent, right? One
By
of
the
the
way,
best
nothing
ever.
but love for PTJ. I'm not hating on anybody. I'm just telling you the way it is.
That's not what we're saying. But at the same time, these men are good at what they do, but not gods. So how much is the market up year to date? Let's do a little exercise.
Which
okay?
country, bro? The U.S.
How much is the S&P 500 up, really, year to date?
15. I think it was 15 last I checked.
Okay. All right, cool. Who's beating the S&P 500? Citadel's up 5% year to date. Millennium's up 6%. Balyasny's up 10%. Exodus Point, I don't know who the hell that is up 12%. Systemic and quant funds on average 11% according to Goldman. The average hedge fund in the first half of 2025 was up about 4.5%. So you can sell everything, right? And just listen to every little word these guys say and hang on, every moment they come on cable news networks and talk about some scary shit. And you could go sell all your stocks. But just know when you do that you're probably outperforming these guys that you're listening to.
You want to see the returns?
Yeah, they suck. I was looking at them yesterday.
You want to see the market returns?
But really, we sit here, we idolize these guys. Fine, fair reasons. Okay. They're good. They run hedge funds. It's not easy. But at the same time, they're not Superman. None of them.
Throw up the
hedge funds
new
stink this
slide
year.
too.
And guess what? They've stunk for a long time. Retail traders. This is a boom for retail traders. This is a secular bull market for retail, the individual investor. By the way, it's so much easier to make money as an individual.
Africa, 60%.
Yeah. And then you could put in Citadel here, right? Big bad Citadel, 5%.
Africa.
Yeah. So
Africa.
But these are the guys that come on TV and everybody
Most
stops
people
what they're
don't
doing
know
to
that
watch.
they have stocks in Africa. No? Is Africa
It's
up
awesome.
60% evidence of risk aversion?
It's awesome.
Africa.
It's
S&P
great.
up 15. S&P up 15%. Nasdaq 100 up almost 20. Russell's up 12. Dow up 11. All country world index ex-US up 30%. Emerging markets up 30%. Latin America up almost 40. Asia up 46%. This year.
Look, you could tell who works in an operations department at a hedge fund in the chat. Yeah, come save the hedge funds, guys. No point giving year-to-date info for a hedge fund. Dude, they've been bad for a long time, hedge fund returns. Okay? Index investors are beating hedge funds like year in, year out this whole cycle. That's the truth. Go check it for yourself.
Africa. 60 spot.
No, it's incredible, and it just speaks to the risk-on environment that we're in. Right?
Speaking of risk on, should we bring in a little Kenny Glick, see what he's trading this morning?
Ooh. Yeah.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Oh, wow. Oh, wow.
Hey, I just bought the African QQQ. There you go. Just sent my order. What's going on, y'all?
So you bring back the old outfit.
TMQ? Of course we know all about it. Yesterday, what did I tell you? Google stocks that have the word metal. Remember, we played some Metallica. We were in CRML. And I said, all this market is fad after fad after fad. And normally when I walk in, I'm like, oh, what's this piece of shit? I've got to short it. Nope, buy it. Every stock 1,000x off all-time lows. So if you see a stock normally at 25 cents that's trading at 5, guys like me used to go, oh man, this is some pump and dump bullshit. I got to short this. No, now you got to multiply where it came from by 100. That's where the stock's going. Of course, we're in TMQ, baby. Woo! $6.25 gets to $7.50, of course. And ladies and gentlemen, when it breaks the high of the day at $7.59, and it probably will, where do you think it's going to go? Ooh, to 8? No, 10, then $12.50, then 15, then 100. Have you caught on yet? Every stock to 100, then 1,000. Wake up, people. Wake up, people. What's up? And again, I heard what you were saying. As long as they keep telling us there's something to be worried about, I got a guy talking about credit default swaps that I need to be worried.
Remember those?
Credit default swaps. Kenny, you don't understand what's going on in the credit default swaps. Oh, we haven't seen indicators like this since COVID. Okay, yeah, let me know when the VIX spikes and the market actually goes down. Let me see when the market actually goes down. All the things that I'm a bear. Remember that, everybody. I'm waiting for the crash. I'm waiting. Let me know when the dash for trash doesn't work. The Rosh Hashanah thing didn't work. The flight to safety doesn't work.
The Rosh Hashanah thing.
Nothing works. Nothing
For the
works.
record, I said not to sell Rosh Hashanah, but more specifically to buy Yom Kippur. You remember that very specifically.
Nothing.
Remember the repos? Remember the overnight repo markets were supposed to crash the market? Remember that one? That was a good one.
God, I'm still waiting.
Now it's the CDS. Now
I
it's
was also supposed to be worried about the yen carry unwind, because when that happens,
oh yeah, the yen carry, the sequestration.
Because last year was just a glimpse of what was going to happen when they unwind the yen and the carry. Who the fuck is carry? The hell's going on here? Every stock 100x. Let me show you what the market did today, this morning, right? Let me show you something.
Put it up there.
You want to see a unicorn shooting rainbows out of its ass? Here you go. Yesterday, the market actually had a downtick after we closed. You see there? You want to short the market?
Hold on, show it.
Oh, I'm sorry.
I want to see the unicorn. What's he doing out of his ass?
There you go. It's a unicorn shooting rainbows out of its ass with a cat flying on top of it. Check it out. Look at that. An actual down move. You'll get some down moves every once in a while, but you got a triple top, a VWAP break, a rollover, breaks the low of the futures session, There's that multi-day VWAP. When you get a 1 minute multi-day VWAP reversal, then you can short. But then you got to remind yourself, oh, wait a second. Shorting is short-lived and you're going to die, right? So then okay, let me take that profit. And then it breaks over the VWAP and rips right back to where it came from. And then this morning, oh, look what happened. A faux show, bro, VWAP break, a 1 minute multi-day VWAP reversal to the upside. So everybody who thought yesterday might be something, it's never something. It's never the big one. We're never going down.
These are the NASDAQ futures, to be clear, right?
Right. NQ futures is the QQQ, which is the mighty. Speaking of Strazza, right? Talking about nobody's beating the funds. No, these hedge funds, nobody's beating the Qs. And nobody beats the Wiz. Nobody beats the Qs. It's the best 100 stocks on the planet. And when one starts to lag, they just kick it out of the club and they keep the freaking ball rolling, baby. Qs to 1,000 within 3.5 years, at least 1,000.
So the Qs after the Wall Street sell side was at a consensus coming into 2023.
Yeah,
that the S&P 500 would fall in 2023. First time bearish consensus from Wall Street sell side this century. They said stocks were going to fall in 2023. The Nasdaq's up 130% since then.
You know when we're going to fall? When Goldman Sachs reiterates that we're not in a bubble moment, because that was the bubble. When Goldman Sachs, they put out 3 or 4 articles. This is when Cathie Wood was king. Right out of COVID, everything was going up. It was nuts. Goldman Sachs specifically put an article out saying we're too stupid to realize what a bubble even looks like. And within days, that's when the market started to crater. And then they reiterated the article. No, don't worry about the sell-off. It's bullshit. You don't know what a bubble looks like. And then we actually had a down move. So give me a Goldman Sachs article. Give me some VIX products that start going up and a market that actually pulls back and breaks the prior low.
I want to point out something that while you're talking, your chart is like pushing everything down because price keeps going up. So the y-axis keeps getting thinner. I hope you guys are paying attention. Like his chart is dancing because it has to adjust because of the new all-time highs that you're literally watching in real time. Just real life. I want some history. You can take this down. Can you throw up slide 5 there, please? So Kenny, believe it or not, Kenny is the old man in the room. Kenny is the grandfather of day trading. Nobody out there has done it longer because Kenny was there when day trading started. So nobody has been doing this longer than a one Kenny Glick. So Kenny, can you school us mere mortals, us children, about what was transpiring in 1999? Can you throw up slide 5, please, guys? Just to remind everybody. So these were a couple of the magazine covers in September and October of 1998. Can you guys throw it up?
I'll tell you what was happening.
There. So this was in September and October.
It's a blank screen.
I can't see it.
Yeah, it's a blank screen. I like that. But that's kind of what your point is. Doesn't matter. It's a blank screen. I'll tell you what was happening. Everybody was bewildered by stocks going up from $20 to $40 within a couple of days. And it was bewildering because nobody ever seen it before.
Here you go. So this is September and October of 98. The NASDAQ didn't peak until March of 2000, 17, 18 months later.
Right.
So that window of late 98 through early 2000, how was sentiment? Were people like not believing it, or were people just, oh my God, this is going to go on forever? Like, what was it like?
Well,
and you were down in Financial District, right?
Yeah. The thing is, it was, again, just go back to me and my dad, who always had conversations. We'd never seen anything like it before. But it didn't feel euphoric. It felt just new and exciting. And again, when they were throwing .coms on the end of any stock and the stock would go crazy, that was where, you had to say, all right, this is getting a little kind of weird. Like amen.com, we were talking about it yesterday. They sold Bibles. Stock was publicly traded for 40 years. They said, hey, we're going to sell these Bibles online. The stock went from $2 to $45. K-Tel Records. Guys, remember that from the 70s? The blue screen, they would sell, they actually started Yacht Rock. K-Tel Records. Just an awful company. And they just said, hey, we're bringing our catalog online. And the stock went from 2 to 120 in 3 days. See, that's a little irrational exuberance right there. But that, you didn't know anything other than what was going on. You knew something was going to give. But what you didn't know was we were going to crash 80% and go sideways for as long as we had. I don't think that's going to happen again, because right now there's so much more money involved. There's so many more people involved, and there's still so many more people. Like I explained yesterday, my son and his friends, and then my daughter and her friends are all want in this market. They all have apps. They all want to be part of this amazing technological industrial revolution that we're going into. Space rockets, robots, quantum AI, and chips, baby, and nuclear. And it's different. It's the same, but it's different. History rhymes and whatever, doesn't repeat. Here we are again. We're having the same conversation as we had yesterday. So
That's right.
The way that we do this is just stick to the plan. So if you wanna buy a stock like TMQ, or let's say you're afraid, right? And here's how I explained it this morning. I was like, all right, listen, the stock was a quarter a couple of weeks ago. Irrationally, you don't want to buy the stock. But if it consolidates in here, you're risking 20 cents for a stock to possibly go up $20. So take the chance, because if it breaks VWAP, you say, okay, I'm wrong. You lose $200. You got 1,000 shares at 660. The VWAP was 640 at the time. I'm risking 20 whole cents for potential of a stock to go 100x, because in this market, every stock that breaks out is going 200-300%. So identify your risk, and every trade is worth putting on. And again, I'm just looking for stocks that have the word metal in it right now.
And if for some reason, if you're not having enough fun, we hadn't even talked about the fact that Kenny's favorite time of year starts next week.
I know.
And that's earnings season.
Right.
Right.
And what's going to be sick about it is that, a lot of these stocks have gone 1x, 2x into their reports. So this is going to be, I think, the most extreme volatile earnings season in the history. I'm not saying it's bearish or bullish. It's going to be extremely volatile, because a lot of profit taking is going to be happening on those reports, and then some confirmations of their maybe deserving that move, and we're going to go even higher. So the volatility of those moves, the dips and the rips and the faux show bros, are more prevalent during earnings season, and that's how we trade VWAP. And again, this whole TMQ started with that little faux show bro at prior day VWAP, and off we went.
Kenny, some people in the chat are offering to give you a Brazilian wax for your chest.
I did that once. Yeah, I was in a band. I was in a Village People cover band. I waxed my chest. It wasn't fun when it grew back. So
you get like rashes. It's no good. It's no good.
Kenny.
All right, Kenny Glick, what a legend.
You look like a bald Don Johnson.
Thank you. I'm more like
listen.
Pitbull. Wait a second.
Me and Kenny are going live today at 2:00.
That's
You heard
what I
about
was
this,
to
JC?
say. Yeah, I was about to say that. Kenny is going live with Strazza.
There we go.
And the link was on the screen for like 10 minutes. The link is in the chat. They're going to talk through Kenny's Q3 earnings playbook here. And maybe he'll be wearing a shirt. I honestly don't know.
By the way, this is irrational exuberance right here. I am the epitome of irrational exuberance, psychotic exuberance, if you will.
If you were wondering what happened to all his hair, now we know where it is.
This is just migrated down. All right. Thanks a lot, Kenny.
Seriously, everybody join us today. We're going to rock it. Kenny is one of the greatest traders I know, a true OG trader. Our strategies are very similar, just on different time frames. We got to do more stuff together, so I'm excited for today. Everybody join us at 2:00. It's going to be a banger.
Yes,
Link
sir.
in chat, and I'll put it on the screen one more time. There it is. Kenny, we'll see you at 2:00, all right?
One more I got for you. AEHR. Keep an eye on it. They reported earnings. All right.
AEHR. Yup, household name around here. We know that one.
Crazy.
Listen, this reminds, throw up slide 2. This here reminds me of the great bowling bubble of 1960. Even
I was just thinking that, actually.
Richard Nixon even put a bowling, lane underneath the White House. I mean, this was crazy. Look at that Brunswick stock. So this was big technology. This is the AI of its time, when they used to have like pin boys that would set up the pins. And then when they created like a machine to do it automatically, I mean, bowling was all the rage. And these bowling stocks were absolutely ripping. And believe it or not, after the bubble crashed, because as it turned out, nobody wanted to fucking bowl. As it turned out, so there are fewer bowling alleys today than there were then, which is fascinating as well in the United States. So
pickleball is the new bowling.
That's right.
How many years in are we on pickleball?
No, but there's no like bowl, but it's not like they were, how like, internet bubbles, they're calculating like eyeballs, right? Like eyeballs per share or whatever.
Yeah.
Like, how they're calculating that? It used to be like bowling hours per civilian. It was like, people were they were pricing in like a 2 to 2.5 hours a week of bowling per person at the time to justify their multiples. It's fascinating, the bowling bubble.
You good at bowling?
Am I good at bowling?
Yeah.
No. I mean, I'll bowl like a 130, 140 or something, maybe.
Yeah, okay. Yeah. All right. Yeah. It's all right. It's all right for me.
I mean, how often am I bowling?
Yeah. How you bowl what every 5 or 7 or 8 years?
In the winter, I bowled with my kids once. That was the last. And before that, it's probably been decades.
Yeah.
I don't really have time for bowling these days. I've just been playing too much darts.
Okay.
A lot of darts, huh? All right.
Hours a day.
Yesterday, Steve was talking about how he'll be able to get in a quick 9 holes before the morning show.
I'll take the under.
That's kind of what I said.
Maybe 18 tomorrow.
Aggressive. It's aggressive.
All right, we got Todd Sohn in the house. Let's bring him out.
Do it. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Sohn. Hello, sir.
What's up? How are you?
Oh, everything.
This is true.
New all-time highs in the NASDAQ yesterday. New all-time highs for the S&P 500, New York Stock Exchange Composite.
Yeah.
A bunch of all the equally weighted stuff making new all-time highs. Is that bearish historically, Todd?
Markets go up 75% of the year over a rolling 12-month basis. So
that's so.
Some roughly that, maybe 73% of the time.
I heard something the other day and I thought about you.
Oh.
I think about you sometimes, Todd.
Oh, you too.
Not in the shower or anything like that, like on my desk. And, we were talking about how there's more ETFs than stocks, right?
Oh, yeah.
Which in and of itself is hilarious. And then what is it that Sam Rowe said? Sam Rowe said that there are more recipes than ingredients or something?
Yeah, more recipes than ingredients.
I thought that was great.
Yeah, listen, I get it. There's a lot of ETFs out there, but there are still more mutual funds than ETFs.
And is this just like a government thing that they just haven't what's the 401k situation with ETFs? Like some can, some can't, right? It's weird, right?
There's a movement to be able to get ETFs into 401ks. The problem is the ETFs are meant to be traded all day and your 401k is not. So I think you got some work cut out for you. I don't know when. That's like an operational thing right there, right? But of course, a lot of companies don't want that to happen because the ETFs are cheaper, right? If I have an active mutual fund in my 401k, I'm probably paying 5 to 10 times more than I would a simple ETF.
Todd, I want to talk about leverage here.
Oh,
hold on. Sorry, Spencer. Yeah. I'm sorry. I wanted to close this out because there's still like $25 billion in $25 trillion in mutual funds and like less than 10 in ETFs.
There's 12 in ETFs now.
Wow.
But
it's up 50% pretty quick.
Yeah,
it was 8 a minute ago.
Because the market's been straight up,
Fair.
There's more money in actively managed mutual funds than there are ETFs altogether. I want to say even active equity mutual funds are larger than ETFs. So there's a long way to go before this. I get it. They get all the ETFs, get the attention, the headlines, but mutual funds are still a fair amount larger than the ETF space. And they had a 100-year head start.
How long before ETFs are at 12 trillion? Mutual funds are at 25. So ETFs have to more than double just to catch up to mutual funds.
Yeah.
How long will it take to happen? You tell me.
Could be end of the decade.
End of the decade?
It's not
8 to 12 in 2 minutes.
Yeah, maybe sooner. Listen, there's the share class thing going to happen.
I thought you were going to say end of the year.
End of the year. I'm gonna go conservative on it.
JC, the decade is half over already.
Well, actually, so it would depending on the market. If we get a bear market, and a multi, like a long one out there, then yeah, it'll happen in the next 2 or 3 years. Because all that money leaves the mutual funds and goes to the ETFs.
Oh, is that what will happen?
Yeah. So it depends on the market too, right? If the market keeps rising, it'll take a couple more years. If you get a big decline, then it'll actually happen quicker.
Todd, you're not that old, right? You're younger than I am, as a matter of fact. But there's a lot of scary things happening in the fall of 1998. And what ended up happening is that you had another.
It was scary.
You had another 70-80% rally in the S&P 500 before the market ultimately peaked.
Yeah, which, if you wanted to make a comparison, was kind of like April of this year.
Right.
A very quick drawdown, whatever the catalyst was, right? Same thing in 98, LTC.
So long-term capital management in 98, Russians and all the stuff, and then you got the tariffs this time?
Yeah. Not too dissimilar within the context of a bull market, which would mean we'd have another good 2 years ahead of us when things get real crazy. And
everybody's expecting that.
Yeah.
That's what everybody thinks is going to happen. Another 2 years like the last 2 years.
The risk going into the end of the year and next year, not too dissimilar to last year, is the sentiment picture getting really hot again. Like way too spicy.
I'm not seeing the spiciness just yet, but I could see it happening in the fourth quarter and spilling into Q1. Yeah. And you think it's too clean? Is it too clean to have that struggle city in a midterm year? You know what I'm saying? After like a healthy year 3, year 4, then a healthy year 1, which year 1s and cycles have been much better since the 1980s. So not all that surprising. Is a year 2 midterm election struggle city too easy? Too easy?
I might be. What works well in year 2 of midterms is healthcare. Year 2 midterm election years, healthcare is a good one.
Can we throw up slide 8, please? Record outflows this year in healthcare.
Yeah, there you go.
And this is after last year and the year before that were pretty bad too, by the way.
People freaking hate healthcare. So I think if you're, and it's been the case for some time now, right? The conditions are there for healthcare to work. And then last week was the first time you actually had some moves, right? Biotech's been working, but then you had Pfizer and Merck kind of wake up there.
Throw up the next chart there. So, we broke out of that base, right?
Yeah.
We retested it, overshot to the downside. Some might call this a bear trap.
I like it. I like it, especially as a complement to a very tech-heavy S&P.
Dude, I am irresponsibly long United Health.
Oh, really? That wouldn't have been my first choice. That's interesting.
We bought 27 leaps a couple months back, like literally right at the bottom. And then 3 days later, David Tepper and Warren Buffett announced that they bought it too. So that was nice. One for the good guys there. I got a better fill than they did, though.
Not one for the textbooks for me.
It was 5 waves down, bro. Dude, it really was. I was talking about it right here on the show. These people thought I was crazy counting Elliott waves.
It's been a minute since I've done the waves.
Dude, you couldn't not see it. Go and look at the chart.
Where do I start it?
I want to see you and Chris Verone sitting there in front of your Bloomberg terminals counting waves on UNH from the fourth quarter last year down to the lows.
The only guy who I know who does waves is John Kolovos.
Is he? Verone doesn't get down with the waves ever?
No.
Really? I would have like late at night, like I could see Verone like with some candles, like nobody's watching and he's counting Elliott waves. Like in my head, that's what I see. No?
Smooth jazz and waves.
Yeah. You're saying no?
Saturday. No way.
No way. Interesting.
That's interesting. You tell me.
I would have taken him for a closet Elliottician. I guess not. But Kolovos, yeah. But he's so old school, dude.
Well, he's a
pattern.
He's a sorcerer, the Gandalf of our time.
I mean, he's no Bartolone. Bartolone's on a whole other planet.
Yeah. No.
Unintended.
But I like it. I'm a fan of that sector. I think it's a very low bar for it to work. UNH not my first pick, but I can work with it.
What do you like?
Yep.
What do you like here?
The
Todd?
Abbotts, the Medtronics, the
Hi, Todd.
AbbVies. Oh, hello, Steve.
What were you doing at a soccer game this weekend?
It was a CMT event. You guys all missed a good CMT event at the New York Red Bull Stadium.
So is that the Meadowlands?
Not quite.
Newark.
Wait, they don't play the soccer at the Meadowlands anymore?
No,
No.
thank God, no.
What was that? The Metro? What was that team?
Yeah, the
Metro.
Metro Stars. No, that was 20 years ago, Steve.
Is that still a thing?
No.
The soccer teams are confusing, huh?
It was a nice event. Myself and John Roque spoke for a little bit, and then we all got to enjoy a soccer game.
That's pretty cool.
It was excellent. It was excellent.
So you guys had like a room to hang out?
We did the presentations in the press room. Like where the coaches sit after the games. Yeah, that was neat. It was good. It's perfect. It was better than having it at a bar like we usually do.
And you're hanging out with Patrick and Donovan.
Wait,
yeah.
Todd, I want to ask you about leverage in this system. I'm looking for boogeymen. Okay, I'm looking for boogeymen, and it would seem to be like these single stock leverage instruments are potential boogeymen. So tell me if I'm here. Let's make this a little bit bigger so people can see. Essentially, more leverage is coming. Right, that's the bottom line here. That's all you need to know. That's the headline. More leverage is coming. If you thought there was a lot, there isn't.
This is do I think it's a boogeyman? I don't know. I don't think it's systemic because these are only $150 billion in assets. So it's it's not enough to take down the whole system, but maybe there's other hidden derivatives being used outside of the ETF world. But so what's happening though is you've had 2X products. 3X were, if you had a 3X product, it was grandfathered in. And then banned in 2020, basically, 2021.
Oh, that's why.
Yeah, the SEC
Is it the same rule for the industry group funds like Nail?
Yeah.
Okay.
Yeah. So those were grandfathered in.
Got it.
And then because the derivatives rule came out a few years ago, you could not do 3X anymore. Now the other, as that list was showing before, there are these issuers who are going to try and get a 3X targeted exposure through using swaps and options. So it may not be perfect tracking.
No, it's not. It's going to be far worse than.
Yeah.
Listen, the 2Xs track really well. They track surprisingly well.
Yeah. So this is the new thing, and what happens is one issuer does it, and because it's such a knife fight for the assets and very lucrative to them because they can charge 1%. We had them filing at 12:59 on Friday, 4:22 Friday, 5:29 Friday, 5:18 yesterday, and then another 60 this morning, which I couldn't fit on this page.
Dude, this is crazy.
It's nuts. And so inevitably it always turns to people get interested in this because it's a lot of wild stuff going on. 1 out of every 4 new ETFs over the last 6 months involves using leverage.
Wow. Okay.
It's wild. If you can handle this, if you know what you're doing, you can drive the F1 car, then go for it. But man,
why is the inverse stuff not
the inverse stuff only works when the market is going down.
Oh, that makes sense. Yeah,
which is actually a great part of the sentiment data set. In 2022 in April, when you start to see that spike with put volume spiking and all the survey data get very negative, that's a good conclusive weight of evidence that we're close to a bottom. So the inverse stuff doesn't really, that comes and goes. The leverage stuff, though, you can see the trend there is higher.
And
for single stocks as well.
When can we expect these triples to hit the market?
If they're approved early 2026,
right?
I don't.
What's going on at the SEC?
They're allowing anything. They don't care. They're allowing anything. Right. Early 26, I think, would be the case. If not late 2025.
Dude,
it's usually 75 days.
The backdrop for financial regulators right now, I mean, this is going to be a mad dash to just get things over the line, this administration, because everything's going. What did they do? They fired the IRS commissioner and did not hire a new one?
I see that right? I couldn't tell you. Maybe they should hire your CPA. They can hire you.
Just like, hey, Scott Besson, this is your job now.
I don't know. It's crazy. There's some crazy stuff.
Right, here,
going
I got
on.
a good one for you guys. Okay. Sell side note of the day. They get better and better in bull markets. Bank of America Global Research cuts BlackRock price objective from 1,396 to 1,394.
Oh, BlackRock or BlackRock coffee?
Bravo.
Bank of America just came out and reduced their price target on BlackRock from 1,396 to 1,394.
Look, man, these
What is going
reports don't file themselves, man. Someone's got to put the PDFs together.
I'm a BlackRock coffee guy over BlackRock.
What do you do if you're that person's boss?
I don't know.
Like, what do you say to that analyst desk?
You say great work, pat on the back, go hit the links.
All right. I enjoy these things.
I don't know.
It's little things.
Yeah, that's funny. That's very funny.
Oh,
Wait, I want to bring up this slide of the number of derivatives. Here, where was it? It was a slide. What was it, like 8 or here? One of these.
We'll have to
the
check
Tesla
out.
thing.
We'll have to check out the triples. Like, you got to wait for them to hit the market. You got to watch them for a while. Like Todd says, see how they track price. If they're trying to get you that triple with calls, there's going to be some slippage there. So
I would think so, right?
Yeah. So these things aren't going to be.
You know. So I don't have data on this, but the interesting part to me is who's trading all the options, because they're outsourcing the option trading to a company called Milliman Financial on some of these.
Oh, that's good to know.
Wait, who?
Milliman Financial. Now they do all these structured outcome ETFs too, like the buffers.
Yeah. Okay. Yeah.
And I'm just really intrigued how there's a small set of people who trade these options, and it's like a lot of product and assets riding on a few people, I guess. I mean, I'm sure they have their robust systems, they have robust staff and whatnot, but it's just kind of like out there. You know what I'm saying? Like, that's a lot of market structure on a small set of firms.
So you're saying it is systemic.
I don't know. I don't have good data, but like, I just thought, but like, if you look at a lot of these option-based prospectuses for ETFs, they're all the same sub-advisors doing the options portions of it.
Got it.
You know, I would love to see a chart that looks at the value of options markets today divided by the value of equity markets. Do people look at that? Wouldn't that be helpful?
That's probably rising.
Options trading is just completely gone off. Right?
It's
For stock trading, all those
roof.
values are up too. But the value, what would you measure by? Like the notional value of like open options? I'll bet that chart is just straight up into the right now in a scary way.
Yeah, CBOE probably has something like that, man.
Yeah, just buy CBOE.
Because you're just buying S&P and Qs, and it's structural bull market, and then you just throw crazy options there for TV money, for beer money.
Todd, I think we're getting to the beginning of the end of this cycle.
Yeah, I'm kind of there.
Right.
When I see JC doesn't like that.
Back in.
When I see suddenly he reappears.
Hey, buddy.
2x Bitmine. I mean,
what happened to the two of you? What happened to the two of you? I remember back in the day, in the old days, you guys used to follow price behavior and would follow trends. Now all of a sudden, this is the beginning of the end, and oh my God, and and the Trump, and here we go. You sound like a bunch of old ladies, especially Strazza.
We're bitter old men.
Just act accordingly.
What happened to the two of yous? What happened to you guys?
BMNU, 2x
bull market fatigue. I'm with Nikki. I think you guys are just like. Tell me which stock you're shorting here, Todd.
I don't short. Come on, I don't short. I don't mess around.
Yeah, but hypothetically, if you were going to short, because this is the end and everything,
If it's not the end, it's not. Yeah, UNH.
Throw up the
staples.
Throw up the slide too. There, throw it up. For you, Ellioticians back at home. I mean, it was clear as day, Todd. It was clear as day, and we got long.
I don't get it.
You don't get what?
It doesn't make any sense to me.
Listen, you had corrective waves.
If,
You had The third wave was the longest wave, which is
Is
very
that the
common.
impulse wave?
What?
Is that the impulse wave 3?
I mean, it's the extended wave 3 would be the nomenclature, but yeah,
Nailed
it
it.
would be an impulse wave. Yeah, sure.
What do you think? Who's the guy who made this? Who created Elliott Wave?
Elliot. It's got to be Elliot. Elliot did
Yeah,
it.
something Elliot. I think it was like letters, like R.C. Elliot or something.
He
like
was
R.S.
on.
Elliot.
Isn't that an author?
Wait, Rick has it. R.N.
R.N. There you go. What did I say? R.S.
It was Ralph Nelson
Ralph
Elliott.
Nelson Elliott.
Oh, Ralph Waldo Emerson.
He was on something else.
In retrospect, it was as clear as day. Well, we were saying it in real time, or at least I was, and they were busy laughing at me while we were buying fucking leaps. I called Sean. First of all, I called Bartoloni. I'm like, yo, Bartoloni, am I right on my wave count here? And he goes, not only are you right, but if you take the low from the 1987 crash in UNH and take it up to last year's highs, we're at exactly the 61.8% retracement of the entire rally off the 87 crash lows.
And JC was like, say no more.
I'm like, are you serious? He's like, dude, I already sent you the chart. I'm like, okay. So then I look at the chart. I'm like, holy shit. So then I call Sean. I'm like, yo, Sean, we're buying UNH. You know, I'm thinking like a bull call spread. You know, he's like, no, buy the stock. They pay a nice dividend. I'm like, what? Who are you? What happened to the Sean? I'm calling you for an options trade, bro. He's like, well, then buy the leaps.
What
like,
about
we're
on the topic of healthcare? What about the genomics? If you want to get the real beta for bullish healthcare.
Well, I mean, the biotech, same story, right? Biotechs, genomics. I mean, they're ripping, right? Same story.
You want the Twister?
Do you?
The Twister.
The wrapper?
It's a Twister.
Twister or the CRISPR?
I saw Twista at a club in Vegas, and he raps very fast.
Very fast. That's his thing.
Very fast. Like,
you know, Slow Jams was one of the fastest rap songs.
Yeah. I think Rap God by Eminem was the fastest of all time, ultimately.
He's on another level.
Yeah. But yeah, Twista, very fast. He's like the Micro Machines guy of rappers.
Yeah, he was a sicko. They made some good jams back in the day.
I don't know where he is now.
Todd Stone is the fastest ETF analyst that we know, and we appreciate that.
I'm quick draw McGraw.
Yeah, that's right. Todd, thanks a lot as always.
No, you're the man, Todd. Fan favorite. Todd Stone.
Phil's coming on. Can we do Phil's Health Corner?
Yeah, Phil's Health Corner. Just eat animal protein and go for walks.
Steak.
Good. Todd, you want to stay for Phil? You can stay for Phil. I don't care.
I'll stay. I just like to say hi to Phil. And then
all right, let's do it.
Of course, Phil's got some jazz on the bumper. Of course. You got to unmute yourself, though, Phil. You got to unmute yourself, Phil. Little jazz on the bumper for Phil Pearlman.
There I am. Look at me.
Oh, there he is.
There he is.
Todd, what's up,
Phil
bro?
Pearlman.
Todd, BMNU, man. Listen, this is a free market. Okay? This is a free market. If people want to go, if people want to blow their heads off,
I'm totally down with that.
Their heads off. And by the way, if you look, you know, if you're a trader, if you're an active trader, and you want the leverage without having to play with, you know, mess around,
yeah, no margin
with the brokers and getting borrows, you just go for it.
No margin. It's been under 6%.
I was talking to Scott. By the way, I'm a shareholder in Rex shares. So just full disclosure. But I love those guys.
They did 60 new ones.
Yeah, they're just rocking. They're going for it. And it's a free market. This is how I look at it. It's a free market. And there's people out there who want the action. People love the action. That didn't start with 2 times or 3 times anything. It started way before. It didn't start with Jesse Livermore. It didn't start with the Tulip Mania.
It started with Ralph Nelson Elliott.
It started forever. It started with humanity.
In the bowling bubble, Phil, we were just talking about the great bowling bubble of 1960. And the amount of gambling and degeneracy that was taking place at all hours of the night, people really working on their game, like they were making a real living gambling on bowling alleys. And then it all fell apart. But for a minute there, it was really what you're just describing, as people wanted the action. That was a big part, of what drove that initial bubble.
Fisher Black said it back in the 80s. People just love the action. He was like, maybe he's like trying to figure out what's going on here. Maybe just people like enjoy it, so they enjoy it. And then there's some people out there who are actually using these devices well, and then there's some people getting blown up and destroyed, and they'll either learn or they won't, As a matter of fact, here's what I want to talk about today. So everybody's talking about a bubble, right? Doesn't matter whether it's a bubble or not.
I hope it is.
Doesn't matter where. What's that?
I hope it is.
Hope it is. Great. Here's why you think that way. Because you have a plan. So there's two groups of people out there. There's one group of people out there that have a plan. They know what they're doing. If it's a bubble, they're going to do this. If it pops, it's going to do that. They're going to do this. They already have it pre-planned. They already know what they're going to do. They have a plan. And then there's other people out there who are just greedy. And they don't have a plan. And all they want is more because they see other people getting more. And they don't care what's best for themselves. And they haven't worked it out ahead of time. By Todd. And that's it. What group are you in? So I come here today to ask you, people watching this, which group are you in? Because it might not be a bubble yet, or it might be the last day of the bubble and it's about to pop. You have no idea. Nobody has an idea. What's his name? Paul Tudor Jones doesn't have an idea. JC doesn't know for sure. I have no idea. So all you can do is plan. If you have a plan, you're good to go. If you don't have a plan and you're just looking at the Maserati that your neighbor got and you're greedy and that's all you care about and you don't have a plan, then you're fucked either way.
No, yeah, that's probably right. Like, it's not just about a plan, but it's about like understanding history. I think it was Soros who said, if you see a bubble, go and buy it right away. When you study, 1998, we've been talking about 98 a lot. Might as well include you in the conversation. Throw up slide 7 there. These were the magazine covers in September and October of 1998, calling for the end of that run, calling for the bubble to come to an end there, slide 7 there. The NASDAQ didn't ultimately peak for another 18 months after that, so they could last a long time. And we've seen this before. And we also see, you also tend to see deterioration of stocks before the peak. So by the time that the NASDAQ peaked in March of 2000, most stocks were already falling. Transportation had already peaked a year prior. There were a lot of divergences, a lot of breadth deterioration. You're just not seeing it now. So, if part of having a plan is understanding the way markets have worked in the past and understanding that it's a market of stocks. So it's about being able to analyze what's actually happening and having a plan accordingly. I mean, number one, I hope it's a bubble because I'm long and that'd be great. I'd make a lot of money. And then afterwards, if the market were to crash, I've traded through a lot of these crashes. I've studied all of them. I look forward to them. It's part of the market. While it might wipe some people out, if you're able to profit during that period, holy cow, you're so far ahead of the game. So I like both things. I like the bubble and I like the crash. I'm a big fan of both.
Well, here's one thing I love about your analysis and the work that you do, JC. No bullshit. I mean, we're buddies and everything, and I have biases, but I love your work, and I've been following it closely for a while. And here's what I love. You see the canaries in the coal mine. You begin to see the deterioration, and you bring it up. You talk about breadth way before the market corrects, and you just bring it up. It's just a thing. Hey, here's some deterioration. Hey, here's an oscillator. Hey, here's some breadth breaking down a little bit. And you just, hey, these are just clues at the scene of the crime. That's all you're doing. And as that evidence begins to increase and mount, then you just change your view. And you will change your view early and get called all kinds of names and sometimes be wrong, but usually you will just be early and you'll get called all kinds of names. And then a month later, 6 weeks later, things begin to roll over and you're already in a very different place. You're already thinking about things. Hey, you know, we made a top in breadth 2 months ago already. We've been deteriorating 2 months. The bull market's been, and other people, and even as the market. So you can have a market that's making new highs, even as the things going on below the surface tectonically are already shifting, and you're seeing that. And I love that because you're just looking at the real picture, no hard feelings, no biases based on your positioning in the market, which is usually what happens. People have a position and then they want to substantiate it with any evidence they can find that's it's just confirmation bias. But you're not doing that. You're just looking at the weight of the evidence. It's a very calm process. It's a very it's a very cognitive process, very emotionless. Love you for that, bro.
Well, no, I appreciate that. Yeah, I mean, I think it comes down to just spending the time to study all the bull and bear markets throughout history, living through a bunch of them, up cycles, down cycles, being observant, just understanding the pain points in, humans, right? Because, it's easier, I found, rather than trying to be smarter than everybody else. Like, it's just easier to me to just make the bets that humans are going to make poor choices, particularly under stress, right? And when you combine politics into the situation, like that was like a really good signal this spring when 90% of Democrat voters thought that the stock market was going to fall over the next 6 months. Like, man, that's a powerful tailwind. When you see individual investors, 14 consecutive weeks of more bears than bulls. We've never seen that ever. That was this spring. And then even just over the last couple of months, we had 7 straight weeks of more bears than bulls as all the major indexes are making new all-time highs. So regardless of whether it's tariffs that are scaring people or politics that are scaring people or interest rates or billionaires on television, people, I think, continue to be scared, continue to not buy into this, and even now people are talking about melt-ups, talking about the parabolic, euphoric end to the bull market. Like, yeah,
You're showing those covers from 98. So 98 and 99, the NASDAQ 100 was up 98, like 80 some percent, 99, 102%. Last year, NASDAQ 100's up 20 some percent. This year, it's not even up 20%. So just from that very simplistic point of view, this is a very different animal in terms of performance. And, I'm just pointing that out because it's so obvious. I'm not finding anything that's like secret. I'm just pointing out like a very obvious thing. We're not even up 20% this year. And we just had like 6-7 days in a row where the market's up and the VIX is up in a row. Did you see that? Dietrich is throwing that out the other day. 6 days in a row, the market's up. 6 days, the same 6 days in a row, the VIX is up. That is not, that's not euphoria.
Above 16. VIX is still above 16. So if you divide the VIX, whatever the number is, by 16, it'll give you the implied volatility for the S&P 500 on any given day. So it's pricing in over a 1% move per day, still with the NASDAQ, S&P, New York Stock Exchange Composite, and many others closing at all-time highs yesterday. If you could throw up slide 4, we talked about it earlier, but Phil, since you're here, it's just, when you see Africa up 60% year to date, historically, is that evidence of risk aversion? Africa up 60, putting up a 60 spot for the year. S&Ps are up 15%, literally doubling the average annual returns the S&P 500 is this year. And despite that, Africa's up 4 times that. Whew.
It's wild.
Think about that.
Just wild. Great stuff.
Yeah. Remember when all the sell-side analysts told everybody to sell their stocks going into 2023? Remember? First time this century that sell-side was at consensus to sell your stocks. NASDAQ's up 130% since then.
Yeah, last week, even in the AAII, there was no decrease in bearishness. Zero.
It was
It was like
flat.
47% bears, and then last week 47% bears again. That's stubborn bearishness right there. I'm really curious to see what it'll be this week. It's just very stubborn. It's just like they're just hanging around, staying negative. And a lot of those guys will capitulate before the end.
You know, what's also interesting is the National Association of Active Investment Managers, also surprisingly not euphoric. Here, I'll just throw up the so these are active investment managers. These are basically financial advisors across the country. I've spoken at their conference. Super nice guys, like really great guys. Throw up slide 2. You know, but again, financial advisors are in the business of raising money for the most part, not so much making great market decisions. So, you know, we're down, hovering, you know, near 6-month lows in positioning by financial advisors, these active investment managers, near 6-month lows. So to your point about individual investors not really bumping up at all week over week, despite all the new all-time highs, you're seeing similar disbelief from the financial advisor community.
Incredible.
Yeah.
Just incredible. Hey, listen, I just want to give a shout out. Coming up, this is Tuesday. We're heading into 9:45. By the way, it's October. It's unbelievably gorgeous outside. If you're in the Northeast, it's ridiculous. Get outside, get yourself into the woods. That's the best medicine. You don't even need any pills. You turn on the TV. You don't need the Pfizer. You don't need the Eli Lilly. You just take a tree pill, a nature pill. Get yourself out in the woods, take a walk, go after the market closes, go on the weekend, go when the market's open. It doesn't matter. Then you'll feel better. Coming right up right now, starting at 9:45, JC. He did the last one last week. He's so good. It's ridiculous. He's a chief market strategist of All-Star Charts. It's official. He trades his fucking ass off. That's about a month. What's that, Spence?
Yeah, no, you said JC. You meant Strazza. But yeah,
well, I was talking to JC.
Oh, okay.
But I'm introducing Steve Strazza. Is ridiculous. He's coming up right now. You're going to see him like you've never seen him before. He's doing a half hour every Tuesday morning at 9:45. It's the open bar. Do we call it the open bar or the opening bar?
Open
because it's
bar,
a pun, right?
Come on,
we call it the open
it's
bar.
the open bar,
Yeah.
right? It's
Come
the
on.
first part of the day,
because
right?
because the candle, the bar is the candle bar is open, right?
Have you
the
met these guys? Come on, open bar.
Yeah.
It's the open bar. Okay, JC, I agree with you. It's an open bar. It's coming up right now, and he just is giving it away. It's just generosity. He's got eyes in the back of his head. He sees everything that's going on. He gives up the trades. He does it. He just does it from the good of his heart. It's coming up right now, Spence. Right, 9:45.
Yeah. When this stream ends, if you're watching on YouTube, you'll be automatically redirected to the next stream, which is like about to start in like 2 minutes. And it'll be on Steve's Twitter. It'll be on our Twitter. It'll be on stockmarkettv.com. We're on the homepage, so it'll all be there. New show, like Phil said, we started doing it last week. We'll do it every Tuesday. Kind of just trying it out, but the initial feedback was extremely positive. So we may have to do it more than once a week. But for now,
come feed some ducks with Straz.
Yeah,
what's that?
Some ducks today.
Yeah. It's
all right,
great.
JC, you want to do a quick recess or can we just hop out of here?
Quick recess. Let's go.
All right, real fast.
Guys, to me, college football is the best thing ever. Throw up slide 2. This is the kid you want to watch. Reminds me of Santana Moss. This kid started the season. He was 17 years old. Malachi Tony. This kid is such a stud. He started the season at 17. He skipped his senior year to go play college football. He might be the best wide receiver in the country right now. The kid just turned 18 a couple of weeks ago. Man, reminds me of Santana Moss. He's got the speed, the moves. He's got the stones. I mean, man, love watching this kid. Malachi Tony, what a stud. What a stud, Perlman.
Dude, he's got the Heisman pose.
Come on. I mean, he's so good, dude. Seriously. Like, it doesn't matter whether you're a Hurricanes fan or not. Like, I talk to other people who don't care about the Canes. They love this kid. He's so good. He's so good.
Dude, I think I texted you like 3 weeks ago. Who's this kid? You were like, he's 17 or whatever. It was crazy.
Yeah.
Look at that.
Okay. Okay,
He's
recess
impressive.
time. This is my recess. He's too distracted.
Hey, baby.
Can you speak? You can't speak. You don't know how to
Oh,
speak.
that.
He's a little potato.
Baby's
Okay,
like it when I make monkey noises.
that's right. All right, we got to go. The open bar is coming up right now. Thank you for watching. Drop us a like. Go make some money. YOLO responsibly. Do all that good stuff. And
YOLO responsibly.
we'll see you later. All right.
Adios.
I can't take no loss.